Okay, let's talk about the economy in 2026. It is a complete puzzle, right? On the one hand, you see signs of record breaking success, but on the other, there are these huge warning signs flashing everywhere. So let's dive in and see if we can piece this thing together. All right, so check this out. This is really the heart of the paradox. The market for small cap stocks, the Russell 2000, it's up over 7%. That's basically Wall Street betting big on smaller companies. But at the exact same time, you look at Main Street, and consumer confidence has cratered to its lowest point in 12 years. So, how can both of these things possibly be true? Yeah, that's the million-dollar question, isn't it? In this explainer, here's what we're going to do. First, we're going to dig into all those red flags. The stuff that's making everybody so nervous. And then we'll uncover the secret, this hidden engine that's pushing the market to new heights. Let's start with that anxiety on Main Street. You can feel it, but when you look at the actual numbers, you see it's not just a feeling. It's very, very real. This number pretty much says it all, 84.5. That is the lowest consumer confidence score we have seen in over a decade, a 12-year low. And you can see why, right? People are looking at everything from global conflicts and trade tensions to just the rising price of their groceries, and they're getting worried. So, what exactly is consumer confidence? Well, you can think of it as the collective gut feeling of the country. It's a measure of how optimistic we all feel about our own wallets and the economy as a whole. And when that number is low, it's a huge warning sign because it means people might just stop spending money. And it's not just about feelings. The US dollar itself has taken a real beating, falling to a 4-year low against other major currencies. Now, why does that matter to you? Well, it means anything we import, think cars, electronics, you name it, gets more expensive. Your money just doesn't stretch as far. So, why is the dollar so weak? Well, it's not just one thing. It's kind of this perfect storm. You've got all this uncertainty coming out of the administration, big questions about whether the Federal Reserve can stay independent. Other countries are starting to hedge their bets and move away from the dollar. And on top of all that, our own national debt just keeps climbing. So, put yourself in an investor's shoes for a second. The dollar's looking shaky, people are feeling pessimistic. What do? You look for safety, right? You run for cover. You start searching for things that will hold their value no matter what happens. And that brings us to what we call safe haven assets, especially things like precious metals. With gold, silver, and even industrial metals like copper trading at record highs, it's a classic signal. It's like the big money players are all shouting that they expect some serious turbulence ahead. And a lot of that expected turbulence, a lot of that anxiety, you can trace it right back to Washington, D.C. There's this feeling of just paralysis and unpredictability. I mean, look at this pileup. It's a perfect storm of instability. We still don't know who's going to be leading the Fed. We're all waiting on a huge Supreme Court decision about tariffs. The Fed itself is totally split on what to do next. And, as if that's not enough, there's the massive threat of a government shutdown hanging over everything. Let's just pause on that shutdown for a moment. Analysts are now saying there's a 75% chance it's going to happen. 75%. That is a huge, completely self-inflicted wound to our economic stability. And a government shutdown isn't just some political drama you see on the news. It has real-world consequences. We're talking about essential services grinding to a halt, federal workers not getting paid, and even critical economic data getting delayed. It's basically injecting pure chaos into the system right when we need clarity the most. And the one group that's supposed to be our steady hand through all this, the Fed, they're completely at odds with each other. You've got the hawks, who are all about crushing inflation, even if it hurts growth. And then you've got the doves, who want to prioritize growth, even if it means a little more inflation. With no one clearly in charge, nobody knows which side is going to win. Okay, so we've got all this doom and gloom. Widespread anxiety, a weak dollar, total chaos in Washington. So why in the world is the stock market soaring? This is where we get to the big reveal. It's time to look under the hood at the economy's secret engine. The answer to this whole puzzle, the whole thing, comes down to one simple word: productivity. All it means is getting more stuff done, more goods, more services, with the same amount of effort, like in an hour of work. And right now, productivity is exploding. This chart right here, this is the aha moment. This is what explains everything. Look at our GDP, the total output of the economy. It grew by a really healthy 4.5%. Awesome, right? But now look at job growth. Less than 1%. Think about that. The economy is getting much, much bigger, but it's doing it without really hiring anyone. And that is the key. For Wall Street, for big companies, this is the absolute best case scenario. It's a dream come true. They're making and selling more stuff, so revenues are up, but because they're not hiring, they don't have to pay out more in wages. It's the magic formula. Profits go way up, but costs stay flat. So what's the magic behind this productivity boom? It's technology, plain and simple. We're talking about huge leaps in AI, more and more robotics in factories and warehouses, all leading to massive efficiency gains. And for companies, that means bigger profit margins. That is the tune Wall Street is dancing to right now. So here we are. You've got these two giant forces pulling the economy in completely opposite directions. On one side, you have the fear and anxiety of Main Street. On the other, you have Wall Street's wild optimism, fueled by technology. And this clash? This could be the very beginning of a totally new economic reality. So what does this all mean for the future? Well, for starters, we should probably get used to this market whiplash as long as things are gridlocked in Washington. But bigger than that, this productivity boom could literally be restructuring our entire economy. We could be seeing profits totally decouple from jobs, while the dollar standing on the world stage continues to be challenged. And that brings us to the final, and maybe the most important question of all. We've figured out the puzzle of what's happening in early 2026, but the answer points to something much, much bigger. If this becomes the new normal, if technology like AI can drive incredible economic growth without creating new jobs for people, how does that change our society forever? What does our future even look like?